To be honest with you, I don't believe that the average stockbroker even understands what the reality is. I think they, for the most part, believe what they're saying. The reality is they've kicked the can so far down the road, and directly ahead of us is a brick wall. It's a brick wall of bankruptcy. This next dip, I think, is going to be the last dip. I think we're going off a cliff.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for June 27th, 2023 through July 4th, 2023 while supplies last. This week we feature Asahi Silver Rounds at $3.49 over spot, 2023 1-ounce silver maple coins at $4.25 over spot, and backdated 1-ounce silver Australian kangaroos at just $3.89 over spot. First, the Asahi refinery continues the legacy of famed private mint Johnson Matthey, which they purchased in 2015 and refined with the same attention to detail, cementing their status as an LBMA certified supplier. Their 1-ounce rounds are 3/9 fine and on sale for just $3.49 over spot. Next, silver maples were the first silver sovereign coins to be minted at 4/9 fine purity, and the 2023 silver maples remain one of the most in-demand coins today. They come 25 to a tube, 500 to a box, and are available at $4.25 over spot. Next, backdated kangaroos are 4/9 fine 1-ounce silver sovereign coins of Australia. They are renowned for their purity and design. They come 25 to a tube and with just 250 coins to a monster box. They are the most affordable monster box available, especially at just $3.99 over spot per ounce while supplies last. Our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always glad to get this returning guest. Bill Holter is a former manager on Wall Street. He's also a broker with Miles Franklin's Precious Metals. He's an analyst of all financial markets. He joins us again this Friday, June 30th, 2023. Bill, thanks for coming back on Liberty and Finance.
Thanks for having me back, Don, again.
We've got there's a lot of big things going on in the world. In fact, it's getting so many plates spinning, it's hard to keep your head on straight. But one of the things that's definitely a fundamental that's driving, or it's going to be driving, a breakthrough awakening on a lot of people's parts that maybe some countries are waking up to already, but certainly most individuals in the U.S. aren't paying close attention to yet, and that's the impact of our burgeoning U.S. debt and deficit. Rick Rule has warned us about that for years, as far as one of the reasons why he's not selling his gold as long as that fundamental stays intact. It's accelerating, and can you talk to us about your observations about the debt and deficit in the current year, right now, what's happening that most people may not be aware of?
Yeah, I mean, this topic is why it's no longer, Bill Holter or anybody else's opinion. Basically the default of the U.S., it's a mathematical certainty. Just look at look what has happened over the last 30 days. We had the debt ceiling circus, whatever you want to call it. And essentially now we don't even have a debt ceiling. And in less than 30 days, the U.S. Treasury has borrowed another $700 billion. To illustrate what's happened, if you go back to 1990, 1995, the amount of interest that was paid on the debt has generally run between $350 and $450 billion per year. And all that time from 1990 or thereabouts till today, the debt has increased from, I think back then we were probably, 6 trillion, 7 trillion, something like that. Now we're 32 trillion. So the debt has quadrupled or more. And the way they kept the debt service down was to continually lower interest rates until they got to zero. And right, exactly. And the debt service stayed in that range of 350 to 450 billion per year. Now we're as we stand right now, the debt service looks to be about 850 to 900 billion. And that's with interest rates where they are now. Do interest rates go higher? My thought is interest rates should be much higher simply due to the risk involved in lending money to a country that's over 125% debt to GDP. Back when we were kids, Dunnigan, the definition financially of a banana republic was any country that had over 100% debt to GDP. Now you've got the world's reserve currency at 125% plus, and the world overall is even higher than that. So, I mean, we're looking at a sovereign debt crisis. We're looking at literally a global bankruptcy, and all you have to do is just look under the hood and look at the numbers themselves, the amount of debt versus the interest rates. It gives you how much the debt service is, and you find out, I mean, here we are now, we're paying more in interest than we are for our military, and that military is the spending on the military is bigger than all of the other countries combined in the entire world. Just to give you an idea of how significant close to $1 trillion a year is.
Help us understand when the interest rate has been driven down over years and years and years, closer and closer to zero, and finally so close to zero it's just fractional, and then suddenly goes up over a very comparatively short period of time up to 5% or more, whatever. Why wouldn't we expect that the service on the debt would be impacted by 10x or 20x? You mentioned maybe two and a half times it's gone up or something like that. Is it because there's this blend of maturity dates out there on the obligations of the U.S. and a lot of those shoes haven't come home to drop yet?
Right. As bonds mature, they get rolled over, and once they get rolled over, they're rolled over at higher interest rates. So you're looking at it's not an immediate. It's not an immediate reaction. It is slower. I mean, it takes time for these debt instruments to mature, but when they do, they mature, they roll over at higher interest rates. The other thing is look at the real economy. Let's look at real estate, for example. A year and a half ago, you were able to get mortgages at 3.5%. Now you're talking about right at 7%. So mortgages have basically doubled. And buyers who are going to use a mortgage to make their purchase, if they qualified for, say, a $500,000 house a year and a half or 2 years ago, now they only qualify for a $350,000 house. So the interest rates, the lowering of interest rates for so many years, and on that steady decline, that was a big contributor to blowing the everything bubble. With interest rates rising now, that everything bubble is getting, I mean, there's pins all around it, poking holes in it, pretty much everywhere you look in the real economy and the financial economy.
How about how it affects companies who need to rely on debt credit so that they can operate, expand, do all the things that companies do? How is this raised interest rate environment going to affect, or is it already affecting companies? Because we were talking about zombie companies, and so couldn't even their revenue wasn't even enough to service their existing debt. That was a year or two ago. What are we heading into right now?
Well, for solid companies, what it does is it eats into their bottom line. It hurts their profit margin. For companies that were basically break even, now they're losers. And for companies, look in the high-tech industry, or even look in the mining industry, for example. An exploration company that does not have production and has to raise capital, when the cost of capital goes higher and higher, you see a lot of startups go out of business because they simply can't raise the capital to stay in business.
So for people who've been watching for the last 40 years, this resilient, I'll call it that, stock market where their broker always tells them, don't worry, buy the dips, you're going to earn on average 7% year over year on your money, just keep invested and keep buying the dips. those people who, and some people who watch our show, it's their spouse who doesn't watch the show that's still listening to that broker who's telling them that. But you used to be a manager of stockbrokers on Wall Street. What do you think those stockbrokers, what's the reality they're facing now, what they should be telling their clients?
Well, to be honest with you, I don't believe that the average stockbroker even understands what the reality is. I think they, for the most part, believe what they're saying. The reality is they've kicked the can so far down the road, and directly ahead of us is a brick wall. It's a brick wall of bankruptcy. So, this next dip, I think, is going to be the last dip. I think we're going off a cliff.
Now, you mentioned before about the debt and deficits of the U.S. We've just scratched the surface of how those are going to impact us, people living in the U.S. But one of the things you mentioned there was a military budget. Unlike many other countries who they may focus a lot of their strength on sort of guarding their borders or that sort of thing, the U.S. seems to have been military adventurists for some time. I can't remember how many hundreds of military bases we have around the world. Ron Paul reminds us of that periodically. But you and I were talking about just recently how spectacular our list of recent failures are of the U.S.'s publicly stated military goals in the world going badly, and us having to kind of drag ourselves out of there with our tail between our legs. But I guess first let's touch on that. Is how does that impact so-called the strongest, most powerful, most wealthiest nation in the world, where we're actually the biggest debtor and the biggest loser militarily? Can you talk about that first and how it affects the being the world reserve currency, etc.?
Okay, well, first off, let's look at what happened in Afghanistan. We basically turned tail and ran, left, I think the number was $87 billion worth of equipment there. We looked completely foolish. It was embarrassing. I mean, I can't imagine any true patriotic American not, feeling sorrow or shame or what have you. I mean, that was a sad day for the United States. And understand that we live in a world of fiat currency. No currencies on the planet are backed. Every currency is based on confidence, based on the full faith and credit of the issuer. Ukraine at this point looks like they are losing very badly, and with what's happened now with the Wagner Group, I think you're going to see Russia is going to turn up the volume. I think Russia is. It's just my guess. I mean, I have no obviously information one way or the other, but it's just my guess that this is going to give Putin. First off, I think he's probably pissed, and I think it gives him the opportunity to shift gears to a higher gear. And that higher gear, I mean, Ukraine is already losing. And behind Ukraine is the United States and NATO. So a very public beating of Ukraine is going to look really bad worldwide. And over the last 10 years or more, we've seen a growing division between East and West. You've seen, the traditional Western financial economic system versus the East versus the BRICS. And I think the danger here is that the BRICS use this opportunity to bring forth a new currency that's backed by gold. That will destroy the Western financial system. It will raise the price or the pricing of commodities, and the East, particularly Russia. I mean, they benefit when gold goes higher, when oil goes higher, when nickel goes higher. So I think the day is coming where we're going to wake up, and it's going to be a very, very different world, and it'll be a completely different world order, where the United States for so many years has been the top of the totem pole, and I just think we will be dropped way down the totem pole, and that is going to make the standard of living for Americans, for Westerners in general, the standard of living is going to collapse because the currencies are going to collapse. And again, currencies are based on confidence, and if the West takes an ass whipping, publicly, what does that do to confidence? It's going to crack confidence, and that's going to crack the currencies.
There's some who I've interviewed recently that talked about that we get all caught up with looking at like dichotomies of the right hand and left hand, or team red and team blue, or the East and the West. And other people have said, for example, regarding warfare, that the objective is never the stated objective. The objective is the war itself, that all wars are bankers' wars, that they, no matter which side, quote unquote, wins or loses, the bankers come out ahead. Can you visit that topic with us about, for example, the Ukraine or Afghanistan or whatever? Sure, the U.S. turned tail and left, dragged out of Afghanistan after spending how many uncounted billions there over decades, but was that in fact a failure, or was that just a public? It looks like a failure publicly, but actually the actual goal that was never the stated goal is met as long as the war can keep going. Why do we have so many wars constantly going, that sort of thing? Your view of that topic of all wars are bankers' wars.
Well, that's true. Bankers do benefit. I mean, they're going to finance both sides. So whichever side wins or loses, it doesn't really matter because they're getting paid along the way. I think this particular thing between Russia and Ukraine backed by NATO, I think this is different. I think it's really important, and I've urged people for a year and a half now, to listen or read Putin's initial speech back in February of 2022. And basically what he talked about was, we were promised, starting in 1998, that NATO would not move 1 inch towards our border. They tried to negotiate, they tried to talk, and if you look at a map, like a heat map, if you will, that shows the growth of NATO presence getting closer and closer to Russia's border, I don't think they really had any choice. I think they were forced into this, and I think the United States wanted to force them into this because, again, look at when 9/11 happened. The economy was collapsing, the financial markets were collapsing, and war is good for economies. 2002, 2003 came along. We did the invasion, and the economy started to turn around because we were more on a war footing. So, getting back to Russia and Ukraine, I don't see that there was really an alternative for Putin, and I would urge people to read. I think he's done 3 or maybe 4 speeches now, and I would urge people to actually read what the man has said and see if you disagree with anything that he says. I think he really sounds like a man sitting at a business table trying to hash out a fair and logical deal, and he was continually rebuffed, and he only had the one alternative, and that was to push back.
Now, as far as what happens next regarding NATO and the U.S., we've already seen, and you mentioned the BRICS a few moments ago, we've already seen members of NATO and longtime allies of the U.S. like France signal that their interest in having talks with China and with members of the BRICS and so on. And it's also been difficult for the U.S. to get compliance from all of our list of allies in sanctions that we've said have to be imposed against Russia. Can you address that? Countries working around the sanctions by just doing a pea and shell game with moving commodities through other ports and bringing them back in, or that kind of thing. How strong is the alliance of NATO actually at this point?
Again, I'm not an insider. I don't know, but what you can see from just public information, it does not look like it's a tight alliance. And interestingly enough, July 4th, Iran is actually joining the BRICS. That was announced earlier today. I'm sorry, not the BRICS, the SCO. So that was announced that they've been accepted, and it will be formal on July 4th. And just look at the list of countries that want to join with the BRICS. It's a long list of countries, and the West is shrinking. the amount of allies that the United States can count on, the list is getting shorter and shorter.
It's so interesting that in the past we've had presidents and others who have been very vocal about saying the U.S. should not be involved in this, being the policeman of the globe, et cetera, like that. Do you believe that the U.S. dollar, being the global reserve currency over the past more than half a century, has been tied necessarily to that global military presence, and the retreating from that global military presence necessarily will mean the loss of that global status for the dollar?
Yeah, that's pretty obvious that the United States was the one that had the big stick and enforced the use of the dollar. And now if that stick if we look weak, then the enforcement of using the dollar is going to become less and less, and the dollar is going to be used less and less. The dollar is going to be, all these countries that are holding on to dollars because they have to pay for various commodities or trade deals in dollars, once there's an alternative for them that they can use yuan or rubles or their own currency, all these dollars that they hold, what are they going to do with them? They're going to sell them. And who's going to buy them? The Federal Reserve is going to be the buyer of last resort for dollars. And let me add, Dunnigan, that if you're a student of history, read about the fall of the Roman Empire. I mean, it's very similar to what the U.S. is and has been doing. Like you mentioned earlier, we've got bases all over the world. Rome overexpanded. They were on a war footing. They started clipping their coins. And I mean, it's the same thing as what we're doing now, is we're monetizing. So it's, at this point, all it is an empty shell. And, I don't know what the event's going to be to illustrate that inside the shell is empty, but it's going to be something.
You mentioned history tells us what happens to empires that have overextended themselves. We also have interviewed Steve St. Angelo from the SRS Rocco Report, and he talks about the fragility of overly complex societies. And this has happened even long before the Roman Empire. There's Asian huge empires and South American huge empires that crumbled in on themselves because their resource supply lines became too long. They couldn't get energy, they couldn't get food, they couldn't maintain enforcement and control over the people on the fringes of their empire.
Well, and that's why I say our world, as an American, our world is going to change drastically. You're used to being able to go to the grocery store 3-4 times a week, stop by on your way home, pick something up or whatever. I think the supply chains, production, distribution, everything is going to be shaken up. So your life is going to completely change, and your life is definitely will definitely change when there's a financial event and you see banks collapsing. I mean, think about it. It was just 3 or 4 months ago that the U.S. Treasury came out and they said, we guarantee every bank deposit in the country. Well, my first question was, who's going to guarantee the Treasury? Because it's not like the Treasury's got all this money sitting in a vault that they're going to pass out. The Treasury has to actually borrow money. And if there's no lenders, who's the lender? The lender of last resort, the Federal Reserve. And they will also be the buyer of last resort when these dollars come home to our shores. They will be the only big buyer left.
For the ordinary person who has worked and earned and saved and hoped for a better future, either retirement for themselves and some legacy to be able to pass on to their children and grandchildren, open our eyes about what assumptions that dream is built on, the American dream, I guess, because if all of those earnings are saved in dollars and not in real things, and those dollars are subject to this loss of confidence, et cetera, and the fragility of the banking system, which we haven't even started to talk about, where does that leave people who have worked all their lives for a financial future for themselves and their children?
It leaves them destitute. I mean, that's the short and sweet answer, because if you saved in dollars, if you saved in something that's worth nothing, the true value of it is zero, And even though your bank statement says, you've got $1 million or $5 million or whatever amount of money in your accounts, your brokers, your insurance companies, and the dollar spends today, that doesn't talk about what the dollar will be worth tomorrow. It doesn't talk about what the dollar will be worth when there basically is the world gangs up on the United States, and that's where we're headed. You're going to wake up one morning. You worked your whole life. You did all the things you were told to do. You were prudent. You didn't take a whole bunch of debt. But when this event happens, you're going to wake up and you're going to be destitute. You're going to have whatever you have, and that's all you're going to have.
Well, when we say whatever you have, people who say, well, I have either $1 million in the bank or $100,000 of cash under the mattress, all of those become worthless in that kind of an event.
And then again, what happens if it costs $1,000 for a cup of coffee and $5,000 for an actual meal and $10,000 for a fine dining meal? And your electric bill now is, instead of $200 a month, it's $2,000 a month, or not $2,000, $20,000 a month. I mean, that's where we're headed. We are headed toward a debt implosion and hyperinflation at the same time. And this is what I talked about years and years ago and was laughed at when I talked about, I think we will have deflation and inflation at the same time. Inflation of the things you need to survive and deflation of the things that you already own.
Right, asset deflation such as stocks being deflated or real estate, your home value going down, that sort of thing. So where does that leave ordinary people who are trying to take prudent steps as they have their whole lives, but now that the curtain has been drawn back and it's been revealed that this system that you thought you understood, that if you just worked hard and did the right thing, you could save the fruits of your labor, you could be rewarded. You found out, wait a minute, I was working within a system that was never set up for my good. They're not following the rules of the Constitution and sound money and the Coinage Act of 1792 or any of that stuff. So, okay, given the new rules that are out there, which Jim Rawls from survivalblog.net has determined it as, we are living in the age of deception and betrayal. He says, prepare accordingly, invest accordingly, relocate accordingly. So how do people invest in the age of deception and betrayal if they want to take care of their future?
It's what I've been saying for years, get out of the system. I mean, don't have intermediaries between you and your capital, and make sure your capital is not in a position to bankrupt. And I mean, that leaves you with gold and silver. Those are the only two monies on the planet that cannot bankrupt. And I would really just answer your question by, where does that leave people? It leaves them with very little time to do what they need to do, because if they don't, they will be destitute.
We certainly saw a lot of people get hurt badly in the Great Depression of the 1930s. My mom talked about what happened to her family, etc.
But that was different. That was a deflation. It was an outright deflation. The money was still good. The money itself was still good. Dollar bills were convertible into gold. Gold was gold. There's going to be an added attraction to this deflation of debt. And that's what 1929, that's what the Depression was. It was a deflation of debt. We're going to have a deflation of debt, but we're also going to have an implosion of the currency, because the currency today is not real. It's not backed by anything. The whole thing has been a mirage for at least 30 years. Well, you could say 52 years going back to 1971.
And people who hold a silver dime in their hands maybe get a hint of what that means, because it's now worth north of $2 in spending compared to the anemic current Federal Reserve notes we have now. So a buck ain't what it used to be. People understand what that means when it hits them in their wallet. If people want to follow your work, Bill, and stay abreast of your latest interviews and your latest writings on this and many subjects, where should they stay connected?
Yeah, I opened on my own website, I guess back in March or April. It's simply billholter.com. There is a contact button on there if you want to reach me, or you can contact me directly through my business email. It's bholter@hotmail.com.
Well, Bill, our viewers are always emphatically glad for your visits here with us. There are lots of supportive comments. They appreciate your down-to-earth realism, and we're grateful for your checking in with us and giving us another dose of sanity at times that have gone crazy. So really appreciate you coming back on Liberty and Finance.
My pleasure. Thank you, Donegan.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Donegan, call 1-888-81-LIBERTY. That's 1-888-815-4237.